So last week, a family member came up to me and said, "Hey Brad, I recently became eligible for my 401k. Can I ask you a couple of questions?" And naturally, I just started watering at the mouth. Like, of course, ask away. This is what I love to talk about. And they said, "Well, I've been talking with some people at work and the person in my plan, and I'm thinking about doing a target date fund." Immediately, all of that excitement just went, meow. It was then that I had an epiphany. And it wasn't until I went through all of the features of a target date fund, what it is, the fees, the pros and the cons, thinking that I was talking them out of it, that I was finished, and they said, "Perfect. That's exactly what I want." And the epiphany was that not all people are as focused on numbers and the stock market and what's a stock and what's a bond and what are dividends. Some people are just out there to put some money in their 401k, to retire from savings, and kind of have a hands-off approach. Well, a target date fund is exactly that. So in this video, I'm going to go through all the features with you of what a target date fund is and why it might be perfect for somebody like you. And if you are new here, my name is Brad. I make videos with tips and motivation on how to get out of debt, how to save money, invest in retirement, and find a path to financial independence, all through my own personal experiences. It is so easy for somebody like me in the personal finance space to get so excited about the different options that people have in their 401k and 403b and all the different stocks and bonds and ETFs. But there are some people out there that just want a simple hands-off approach. And for those people, the people that want to retire into their 401k or 403b, a target date fund really is a pretty good option. And it's kind of a little bit of a bummer that the target date fund gets, a little bit of flack and really doesn't get the amount of notoriety that maybe it deserves. And this is a great video, guys, for the comment section. If you're into target date funds or you've been thinking about them, please get down below. Let people know who you have them with, what year, what your experience has been, because I personally don't have one. But this is only through research. So if you can give some of your own feedback, that would be great, and I would appreciate it so much. Drop down in the comments and let me know your opinions about a target date fund. So what does a target date fund really target? Well, in my research, it really targets two things. One, the estimated year that you think that you are going to retire, and two, the different allocations of risk associated with your retirement portfolio. So you have the 401k or the 403b, that's the shell of the car. And then this target date fund is going to be what's inside of that vehicle that makes the 401k run. And we talk about risk and non-risk. We think about stocks being a little bit more on the riskier side. They're a little bit more volatile. And bonds being a little bit on the less risky side. They tend to have a fixed amount of return. Now, obviously, with more risk comes the possibility for a higher return, and the low-risk bonds tend to have less of a return. And it's common amongst financial advisors to say, as you get older and you approach retirement, you want to lower the amount of risk in your portfolio. And essentially, all they're really saying is, we want to lower the amount of stock percentage that we have in our portfolio and raise the amount of bonds that we have in our portfolio. Now, before target date funds, this would be something that you would have to go and do yourself every couple years, every year, whatever you thought was best. You'd have to go in and you would have to either add money to the bond side to change that percentage up, or you'd have to sell off some of your stocks and put them in the bonds. You would have to do this on your own. What a target date fund is going to do is allow you to pick the estimated year that you are going to retire. Generally, they come in 5-year periods. You are going to pick the year, and what that fund is going to do is automatically reallocate your percentages of stocks and bonds as you approach your retirement date. So it doesn't really matter your age. It has to do with when you think that you are going to retire. So the year coming up is 2020. Say that you think you are going to retire in 20 years. What you are going to do is you would look for a target date fund for the year 2040. Now, not all this is set in stone either. If your retirement dates changed more or less, you can always go in and change them whenever you'd feel comfortable. That's essentially what makes it set it and forget it. As you go on through your career and your money is just coming out of your paycheck, you're not that into the stock market, you don't care, you just want to know that you're saving. As time goes by, your stock allocation percentage is going to go down and your bonds are going to go up. And I'm going to show you in just a minute on Vanguard's website exactly how that changes over time. And just like anything when it comes to retirement, every company is going to structure their target date fund a little bit differently. Meaning, what stocks are actually making up that stock percentage and what bonds are in there making up that bond percentage. And also, what percentage does one company think someone should be 20 years from retirement as opposed to another one? One company might say you're 20 years from retirement. Okay, we're going to be at an 80-20 stock to bond percentage. Where another company might be like, we're going to be at 75-25 when we're 20 years out from retirement. So that's the little bit of research that you have to do. Now, luckily, with your employee-sponsored plan like a 401k, they're going to give you some options to choose from. Now, you've heard me say over and over again that, I trust Vanguard. It's where all my stuff is. So that's just a company I'm familiar with. And I don't want to tell you about something that I'm not that familiar with. So if you have Vanguard, I'm going to show you what that looks like. If you're going to use somebody else, then it will probably be pretty similar. But you have to go do your own research as far as what company you choose and what year that you choose for your target date. Now, the real cons that I've seen is that because you don't want to do a lot of the back-end research and you want it to be a little bit more hands-off, the fees tend to be just a little bit higher than your standard mutual fund, especially when it comes to Vanguard. And I'll show you the differences and how you can look for those fees. Some people don't mind those fees for that hands-off approach. The other con is that you can't customize what's in that stock percentage, meaning you can't go in and say, these are the stocks I want to be a part of my 75% stock holding. They're going to do all that for you. So between a little bit higher fees and the lack of that customization, that might be something for you to think about before going with a target date fund. And also another con that I've heard is that they are a little bit too conservative sometimes, meaning that when you are far out from retirement, their bond percentages will still be a little high. So they lower your risk for some people's comfort zone. And really, if you want to change that, all you'd have to do is extend your target date a little bit further out from retirement, because the further you are out from retirement, the more risky that these target date funds will be. And I'll show you exactly that right now. So simply all I did was Google Vanguard target retirement funds. I'll click on that and I'll show you exactly what it brings up. It's going to give you a rundown of exactly what the target fund is. Less risk through broader diversification. Professionally managed asset mix, meaning the assets are that stock and bonds, so meaning they're going to do it for you. Automatic rebalancing, what that means is what I was saying, how you'd have to go in and change those percentages every couple years. They're automatically going to do that for you. And the low costs. Like I said, they're a little bit higher than your traditional fee, but depending on what company you go with, there's definitely things out there that are a lot more expensive than this. So we would look right here, which target fund fits your timeline. So you look at the amount of years that you want to retire, 45, 40, 35, and also it gives you that target retirement year. So you can choose that. Now remember, it doesn't have to be set in stone, okay? Now if I were to click on one of those, let's click on the furthest one out. If you click on that, here's that target retirement fund. So this year is the year that you think that you're going to retire. It gives you an overview, okay? And the things we want to look at here is the allocation. So we are essentially at 90%, 10% stock to bond. Now, because there's more stocks involved, there's a little bit more risk and a little bit more volatility. If we come back up here to fees and management, we see that there's an expense ratio of 0.15. Now, to give you some comparative, Vanguard VTSAX, their total stock market mutual fund, comes in right now at 0.04%. So you can see it's a little more than 3 times more expensive, but like I said, that's the price that you're going to pay for having this hands-off approach. As you come closer to retirement, I believe that Vanguard's going to stay at roughly 90-10. Let's look at this one right here. So still, they're at 90-10 even 30 years out. At 30 years out, you can see that we're still at that 90-10, okay? And because we're still at that 90-10, we still have an expense ratio of 0.15. If we click on 25, we see now we're still at 90-10, and the fees are still at 0.15. So you could see with this approach, whether you were going to retire in 25 years or 45 years, the target date funds are essentially going to be pretty similar. When we get to 20 years from retirement, 2040, now we start to see there's a little bit of a shift. Now we're at 83 and 16. And with that change in allocation, the fee should probably change as well. It goes down to 0.14%. So you can see that as the allocations change, now the fees are also going to change as well. If we were 5 years out from retirement, maybe you're a little bit older, you will see a huge shift, almost 60-40, right? Higher bonds, more protection, and a little bit less volatility. And you can see there's also going to be a graph down here that's going to tell you over the years how that's going to happen. And because you're going to be retiring quickly, and because bonds tend to be less volatile, the fees will probably be the lowest here, and that's correct. 0.13%. It wasn't until I really did my research where I found out that target date funds really do hold their place in some people's portfolios as far as retirement. If you are a hands-off kind of person and you really right now just want to be focusing on saving money, or you want to start thinking more about it later down the road and you just want to get started, like I said, nothing's set in stone. So this might be a good place for you to start for a couple years until you really can focus on other mutual funds and things that you want to change, because you will be able to move those things around a little bit more. Guys, I hope this gave you some value and some understanding of exactly what a target date fund. If it is, please just hit that like button. It tells YouTube to send it out to more people that also might be interested in the target date fund. Until I see you on the next one, guys, stay positive, work really, really hard. Always, please be kind to others. I hope you have yourself an amazing day and a better tomorrow.